We bring in Kevin Green, senior markets correspondent here on Schwab Network, to have this conversation. Breaking news, unchanged from the Federal Open Market Committee. They have a lot to balance in their minds. It was very unlikely to see a move today, though many are still thinking about the two cuts in the dot plot. We're still thinking about two cuts for 2025. More likely to see those in maybe June and December, or even March, maybe. Some of your thoughts on what's going on here right now?
Yeah, well, we did actually see a little bit of a sell-off when it came to the S&P 500. It dropped around 20 points here, Nicole. I think it's because the Fed statement does not include language that inflation has made progress towards 2%. And that has been something that the market has been hanging their hat on. So does that also indicate that maybe inflation is going to remain sticky, or do they believe it's going to remain sticky? And is that going to be a higher for longer narrative? And I think that coincides with maybe a little bit of a pop in rates, dollar trying to push back to the upside here. But they do believe that there is still more balanced risk compared to the inflation as well as to the labor market. And they did have a vote that was unanimous when it came to the decision of holding rates where they're at right now. So overall, it seems like it's kind of the same statement that we've seen over the last couple of Fed meetings outside of that language about progress for inflation. So I'm sure that Powell will be asked about that. And if he does kind of come back and say, look, we've seen some pressures over the last couple of months, especially with the most recent CPI print, and we are going to monitor the situation until the data actually says otherwise, that we are seeing inflation crack. Powell also, this is a little nugget, he actually does, for the most part, signals the Fed's PCE target that's going to be released on Friday. He already releases his forecast out there. So kind of keep your eye out on that, because we do have a fair amount of estimates there. And if he gives that target that's going to be a little bit hotter than what the street's expecting right now, that could create a little bit more volatility in the markets. But we have to still wait for the commentary. Knee-jerk reaction for right now. Vol's a little bit elevated, but once again, nothing that stands out outside of the removal of the moving towards the 2% target for inflation.
So, yeah, they've made progress toward the 2% objective, as it had in the December statement, like you said, saying inflation remains somewhat elevated and that the labor market conditions remain solid. It's very interesting because right now there's a lot of uncertainty pertaining to tariffs, uncertainty pertaining to the potential freeze of federal programs that was put out by the White House. It was since rescinded, but there will be more clarity on that. I mean, I don't think the White House gave up on the idea. I think they just rescinded it so they could be more clear on which programs they're trying to put a freeze on. In the meantime, the markets may be, throughout this 1 hour, could be volatile as we get more later in the press conference. So some final thoughts, Kevin?
Yeah, I agree with you. And I'm sure he's going to be asked that question when it comes to the fiscal spending policy, as well as just the developments over the last 24 hours when it comes to these grant programs. One thing for the bulls, though, here, Nicole, the Atlanta Fed GDP Now forecast actually did revise aggressively to the downside this morning here. It did actually come in at around 2.3%. Market was looking for 3.2%, and this is actually after a press release or a release of the Advanced Economic Indicators report that saw a substantial drop in exports for the month of December. And so if that also kind of leads way to maybe the economy slowing down or maybe cooling a little bit, then maybe we could kind of factor in cuts moving forward. But the market's still pricing in 2 cuts for this year. The next one that's being priced in is in June, and I think that's sitting at around 78%. That was before the release of these minutes, though, or release of this data, though.
All right, thank you so much. I'm going to be talking about the statement too on labor. Kevin Green, thank you so much.